All right. Hey guys, Brad here at Elliott Wave Made Simple. We're going to take a look at silver again through the lens of Elliott Wave. Last week we had a breakout. We had the setup. You got to go back and watch the previous two videos on silver if you want to catch up and pick up where we are right now. Let's dive into the chart and try to come up with some parameters to see where silver may be headed this week. All right, let's head to the chart. All right, so here we are. We've made it up and out of this area. Silver is moving very strong. What I'm interested in showing you guys right now is this move up into the Monday, August 12th high. We're going to count that as 5 up for wave 1. This is a 3-wave correction. Something of value for you guys. When we look at ABC corrections, we're looking for proportions. We're measuring these things. I'm not going to rehash what I've already gone over in the previous videos, but I just want to mention one thing. You notice this B wave top right here from Wednesday, August 14th in the morning actually exceeded the previous high. And to some people, that's confusing. Some people that don't understand the context of Elliott wave, you might think this is ridiculous because this is, if you're counting this as wave 1, how is it that we could have made a higher high? Well, the reason is we don't only look at structure of price, but we look at Fibonacci levels and we look at the relationship between various waves. So I know Elliott wave, part of the reason why it gets a bad name, maybe you don't know that Elliott wave has a bad name, which I think is great. If you're with me and you haven't heard the criticisms of Elliott wave, great. Just ignore all the noise, learn how to perform Elliott wave properly, and you won't be disappointed. What I want to mention is we use the fib levels, but we also use the structure of price, and we also use the relationship between one wave to another. Sometimes there are ratios. There are Elliott wave standards that allow us to project what is most likely. Okay. And sometimes if you don't have a deep enough knowledge of Elliott wave, you're going to see things on the chart that seems illogical, or maybe you had a wrong idea about what the rules are for certain things. But just keep watching my videos, keep breaking it down, especially the last one from last week, the very long video on silver. I think that's a good educational opportunity to take notes because I cover a lot of things. Are you going to learn Elliott wave from watching one video? No, you're not. Are you going to learn Elliott wave from watching 5 videos? No, you're not. But as long as you learn something each time and keep building on your knowledge and experience, you need to make these charts yourself. Practice making the measurements. When you're looking at one of my charts, try to imitate my chart. Try to recreate my chart, especially the last video, because I really go into details. This video is not going to be quite as in-depth. I'm really just showing you the analysis, but it wouldn't be right for me just to plow through the analysis without at least explaining something in each and every video that I think may be of value to you as you journey down the path of Elliott wave. All right, let's get back to the chart and keep talking about what I was just showing you. This ABC pattern, a B wave is possible to get above the preceding high and not count as a new high. So this is wave 1. This is a 3-wave correction, ABC. The challenge is the B wave got above the level of wave 1. Is that allowable? Yes, it is. Why? Because of the relationship overall with this wave structure, including where this 3-wave move is happening in context of the larger structure. It's very similar to how a guy who uses candle work might be looking at the 8-hour candles or the 4-hour candles, but he's keeping that context in mind as he drills down. Maybe he's actually trading on a 1-hour candle or a 15-minute candle chart. but he's got it in his mind what he was observing on the 4-hour candle chart, or even the 8-hour or the daily. Well, an Elliott wave is the same thing. We're gaining context from the larger degree picture, or another way to think of it is you're zoomed out. So you've got this larger degree context, including structure, including fib measurements on the larger Elliott wave structure. So that when you drill down into the smaller structure, the smaller degree structure, you can allow for something like this B wave top to exceed the level of wave 1 because of where this is happening and where all of these fib levels are hitting. Okay, for me, the real kicker was this 5-wave move down, which if you go back and look at my videos, amazingly, this was an expected area to hit, thus my buy box down here. And, did it exceed it a little bit? Yeah, sure it did. That's okay. So, all right, so now that I've kind of talked too much about something, let's get on with the analysis. So looking at this white circle wave 1 and 2, those 1, 2 labels go with these white Fibonacci levels. So we had 5 up for wave 1. We had this ABC that I just finished describing to you again, hitting the 2723 level. And that is what allows us to project to these higher levels on this white fib to try to discern where this structure is pointing. Now, these white fibs are showing you these various levels that go all the way up here. The 2618 is the third, just call it 3150, 3050. All right. So these are the levels that we're fishing around for up here. And actually, there's a top over here. We're going to call it a zone that comes in at 32. So there is a zone here at 32, and there's a fib at 3211. So just keep that in the back of your mind. Just call it 32. It is not going to surprise me at all. In the next couple of weeks, we see $32 in silver. Am I predicting that? No. Does the structure allow for it? Yes. Now, here's where the Elliott wave context is really going to help us. So that's the larger degree structure in white that I was just explaining from this 1, 2. Well, this is 5 up. Now, this is my only question. Is this structure right in here could be measured a couple of different ways? So in the spirit of simplicity, I am actually going to leave this move right here. I'm just going to leave that alone for the time being. I mean, I'm assuming it's a 1, 2, but what I'm actually going to measure for is the internal structure. In other words, off of this low right here, just the one that dipped just below 2786, I'm going to imagine this is a new 5 up to there. This is a wave 2, and then we are now going up in wave 3. So these purple fibs, and in fact, let me change the color of my labels to purple so that my fibs are the same exact color as the labels. So even though, I hope I'm not confusing you, but for the moment, I'm counting this as a wave 2 right here. Okay, it's a little ambiguous, this internal structure. So what's going to happen is I'm just making a judgment call. I'm measuring these purple fibs as if this is a 1, 2. So it's really this inside structure. In other words, I'm consciously leaving this little bit of structure. I'm leaving this out of it for right now. And I'm projecting this internal wave structure because to me, this could be 1 here coming off of this low, but it could also be 1, 2. So there's a little bit of lack of clarity in the wave structure right here. So what I'm going to do is I'm going to count this internal structure as a 1, 2, and that's these purple fibs. So we're going to know in short order if price, okay, so you know what, now that I've confused you because Elliott wave, there are several different potentials right here. So one way to think of this is not to focus on the labels, okay, for the moment, and just focus on the fibs, because I've made a decision to measure it in the way I'm measuring it. And these labels, I can go back and put these where I think they go once I get more price information. So what I'll be looking, here's the key. What I'll be looking for is what kind of a reaction are we going to have in this area right here? Call it 29.30 to 29.45. So 15-cent target area. If price comes up in here and gets rejected here, that's going to be a clue as to what's going on here. If it keeps going right on through that, that's going to support the idea that this measurement with the one down here, and this is actually the one here, like this, and then this is the two where I had it. So with those measurements, you see, that allows for this wave 3 to come up a bit higher. Okay, so if silver really means business, meaning the bulls are really the ones driving the boat, I will not be surprised at all to see this week to get above 29.37. Remember, I was just talking about 29.30 to 29.45. If it plows right through this level and comes up here and gives you a wave 3 in purple to the 1618, which, as you know, the 1618, the golden ratio, is a very common target for wave 3. That would come in at, just say, over 30. So it's very realistic to think that silver is going to see over 30 this week. That's another dollar higher than where it is right now, which, my goodness, that's a lot of money if you're trading futures like I am. So this is a golden moment for silver for sure. So let me adjust these levels by turning the magnet back on, because I'd like to get them exactly where they are supposed to be. So if you want to play along at home, I'm putting the first click of the fib projection tool at this low at 27.23. The second click of the fib extension tool, you get 3 clicks. The second click is going to go at the top of that wave, which is 28.50 on the nose. And we're going to allow this to be wave 2. So this is going to be like an A. Now, keep in mind, this is what I was talking about. This structure is a little unclear. So I'm just speculating. This is top of wave 1 because this looks nice as 5 up. This is A, B, C for what is called a running flat. So the next fib level is going to be the bottom of this wave 2 right in here, which comes in at 28.09. So that's where I've got the fib. So really, if the bulls mean business, you are going to see, if the bulls mean business, you are going to see 30.14. I think early this week, I don't know, early meaning, who knows? Timing is always the craziest thing. Maybe by Wednesday. Who knows? I'll do some timing work eventually, but for the purpose of this video, these purple fibs, this is a potential. Now, this resistance is still good. There's the 100 fib there, even though I've moved the overall purple fibs now to suggest that this is a 1 and this is A, B, C, which I don't love because the structure is a little weird, but I already measured it the first way. Now I changed it to measure it this way. And the 1618 comes in at 30.14. So this level could be resistance. You could see a little resistance here, but just as it plowed through this resistance, ideally, if this is really this wave 3, the structure, it's going to, it could very well get above here and then back test it. But the ideal bullish target would be up here above 30. And then what we'd look for is a wave 4. And we'll measure for that. Once we get more price information, we will be able to constantly measure and come up with targets. So right now, I'm leaving these white fibs alone and I'm measuring this internal structure. And it's going to relate to the white fibs for sure. but we'll get more concerned about the white fibs once this next wave tops. Okay, so to me, this does look like a wave 3. It's possible this is a 1-2 right here, another 1-2 internal. So let's see. Yeah, who knows? I don't want to get too tied up with this micro stuff. The lower you go in the time frame, just like with candles, when you drill down to the smaller degrees in Elliott wave, it is less reliable. Same exact concept as in time frames when you're using candle work. You're down on a 5-minute candle or a 3-minute candle. It's a very different game at that level. It's much less reliable. It's squirrelier. Well, it's the same thing with the Elliott wave structure. So the main structure that I'm keeping in the back of my mind are the white fibs over here to the right. And where this tops out in this next purple fibs and the purple labels, wherever this internal wave 3 tops out, and we get at least a pullback to the 236 of that level, which is a wave 4. The 236 is pretty much the minimum for a wave 4. So we will measure for that. So the game right now is, let's see if we can get above 29.36, definitely early in the week. It has to get above 29.36. And then with any luck, the way I've put these purple fibs on here, we'll see if that is accurate. If it terminates somewhere before that, then I'll move these measurements back to the way I had it before. Okay, so, some people criticize Elliott wave, by the way. What I just said, hey, once more price information happens and I get a local top and a wave 4, then I can go back and put the original fib tool where it should be so that it's consistent with where a wave 3 should top. It's almost like the way some tools repaint, right? Some technical analysis tools repaint once it gets more price action. People give Elliott wave grief because you can sort of manually repaint. Yes, because you're basically, once you get more information, meaning more price action, and you see where fibs are getting hit, which fibs are getting hit, you can adjust your count so that it makes sense. And what that allows you to do is continue to get better parameters that project into the future. So yes, you're using price information to your left. In other words, from the past, you're using that price information to create the parameters for the future. And we're using Fibonacci to project. So I hope you're getting what I'm saying. This is an incredibly important concept about Elliott wave to understand. Yes, counts can change. Yes, because if you realize you got it wrong, or there's a better way to count a wave structure once more information has unfolded, then yes, you make the change. Just the same way a technical tool might repaint. It's just that we're doing it manually. Okay, anyway, back to the chart. I'm almost done here. Really, so the parameters are, you really don't want to see price come back down and get back into this area, call it 28.50. You do not want to see that early in the week. What you want to see, price could come back here, 20, the upper 28s, 28.80, whatever, somewhere. That would not be a horrible thing if price comes back down to the 28.80s. But ideally, what you want to see is price get above 29.30. Get up into here, maybe do a back test, and then keep going. The ultimate target for this week is to get above 30. That's your job, silver. Now, look, if it runs into this white fib here, could it be that a wave 3 terminates? Let's see where the purple fib, if it's the 1382, where does that hit? Look at that. 1382 hits right on that white fib, which is the 1618. So can a wave 3 in purple terminate at the 1382? Yes, it can. I don't think that is as likely. Why? Because when you've been looking at these kind of measurements, as I have, I put in my 10,000 hours very early. I grinded it out at the beginning of my learnings in Elliott wave 5 years ago. I did my 10,000 hours. Once you've looked at silver long enough and you've looked at instruments that are highly volatile, like oil, you see these extensions all the time, especially when the price is in a bull mode. And right now, silver is clearly in a bull mode. So therefore, I'll give it the benefit of the doubt to reach up and hit higher fib levels. So in this in this example, do I think wave 3 in purple would terminate at the 1382? No, I think it's more likely that it would terminate at the 1618, just because it's in order for it to terminate at the 1382, that's less bullish. Whereas I see it being bullish. So I'm going to give it the benefit of the doubt that it's going to come up here to the 1618 extension. Okay. And then once that happens, wherever this tops, whether it tops at 2984 or it tops at 3014, whichever area that it tops and starts coming down correctively, I will measure for the wave 4, and then we will be able to dial in where we think, first of all, the wave 4 should be contained. And then we will be able to project for the final 5th wave, which, guess what, is really only the 5th wave of 3. So there's going to be, just how bullish silver is. If we complete this 5-wave move in purple, which I'm going to track closely. So by the way, if you haven't subscribed to the channel, if you've been liking the silver analysis, make sure you subscribe, because I'm going to be tracking silver into the near future and beyond. As long as this thing is following this bullish move, I do not see a better risk reward. Now, look, I've been telling you about silver for a couple of weeks now. So if you've been paying attention, hopefully you're long. And if this continues to play out, this is just the beginning still. Over the next few weeks or month, we could see an amazing extension in silver. So be sure to subscribe. Also, like helps me because it encourages me to keep making these videos and producing these parameters for your trades for free on YouTube. So go ahead and subscribe and like. Anyway, back to the chart. I'm going to try to wrap this up now. So that's the overall longer term view, is once we get up here. Now, look, this is getting way ahead of myself, but if we complete this 5-wave move in purple, then I'll be able to measure where the wave 4, that really the 5-wave move in purple is only just this wave 3. So then we get a larger degree wave 4 pullback, which typically targets the same zone as the previous lower degree wave 4. So the next wave 4 will probably come down here. So by the way, you should never have FOMO about any of this, because if you miss this, don't worry about it. Wherever this tops, you're going to get a pullback, and you can start layering into longs again on the pullback. And if you miss that, or you really want to be conservative, wait for this wave 3 to terminate, and we'll get another wave 4, and you can layer into your longs again. And then once that wave 3, 4, 5, I'll get into that. We'll figure out where that is later. After that, you're going to get another bigger pullback, which is going to give you an even more substantial opportunity to get long. So look, there's no need to rush into anything. You've got your parameters. You know what's going on. Like and subscribe. Stay in tune with the silver charts, and you'll be on the right side of the trade. You'll at least know where your risk is. Okay. So the main thing with silver when you're trading it is don't get killed. That's the main thing. Manage your risk. That's really the name of this game, is risk management. All right, guys. Thanks for watching. I hope you have a great rest of your Sunday, and I'll see you in the room. The room is The Professor Trades. The Professor Trades. The link is in the description of this video. Come join us. Do a 7-day trial, 7 days for $7. I mean, it's a no-brainer. You'll come in and you'll get these updates. I'm updating the silver chart 3 times a day in the room. If you're not in the room, you just get it twice a week for free on YouTube. So take your pick. All right, guys. See ya. Thanks for watching. Bye-bye.